This is the wrap-up for the live market open for Thursday, March 3rd. We have a better market mood, higher oil prices despite not so good figures. Markets are ignoring the political implications of Super Tuesday. That means Donald Trump's danger. The ECB talk is intensifying and putting pressure on the euro. We had figures yesterday were quite mixed. UK construction PMI disappointed. On the other hand, ADP NFP came out better than expected, but with the downwards revision. Crude oil inventories jumped a lot, but it wasn't that. But distillates and gasoline were sort of okay. Australia continues enjoying good figures, a small beat in trade balance, smaller deficit than expected, and the Australian dollar is at new ground. And the Australian dollar ignored the Chinese services PMI, which was not good. Okay, let's look at currencies. Euro dollar remains under pressure towards the ECB decision in 1 week's time. It's off the lows. It's even moving a bit higher. Well, we could add another another resistance line here. Oh, sorry, at 109 more or less, but. Anyway, we're in a narrow range. I think that I see the trend still to the downside. 107.70, 107.10 to the downside, to the upside, perhaps 108.90, 109, and then much more significant resistance at 109.60. Pound dollar enjoys its time in the sun despite weak figures, despite ongoing uncertainty, the better mood in markets, the rise in stock markets, and the correction after falling so sharply sent it above 140. Resistance at 142.30, and before that 141.25. Support at the round number of 140, and of course the lowest support line is 138.40. Dollar yen, better market mood. Well, in the past hour or so, not a bit. We're seeing a correction, but in general, the trend for dollar yen remains to the upside. We found support at the former resistance line of 113.20. High resistance, I would say 115.25. Former line here of 114 is, well, basically shattered. Dollar CAD, we had it break, a big break to the downside under 134.60. The line, I think, is still relevant, even though we had it also walk around this line quite a bit yesterday. 133.90 is support. A lot depends now on oil prices. Aussie dollar, really looking great, made a break above 72.80, which was a very clear separator of ranges in the past, and now it's yeah, we are sort of steadily above this line. 72.80 support, 73.60 is resistance, and Kiwi dollar is at the upper end of the range. 67 works very nicely as resistance, 65.50 support. You see your question here about the Kiwi. Latest fundamentals is that we had milk prices rising more than expected. That was good news. It helped the recovery. But earlier this week, we had building consents and business confidence miss. Tomorrow, next week, we have the RBNZ rate decision, and my tendency is a bit to the downside. I think they'll try to push the Kiwi lower, but so far it's showing us what range trading is. Trading all the time in range. Let's talk about the events for today in this wrap-up. Services PMI in the UK expected to show a small slide, but still solid growth, around 55 points. It's the biggest sector in the UK, very important for the pound. Now, though, we have some calm in markets and some referendum talk is a bit at the back burner, not too far from the forefront, but anyway, could have a big impact at 9:30 GMT. 1:30, we have US jobless claims expected to remain unchanged. The big event for today is the services sector report in the United States. The US ISM non-manufacturing PMI. Reasons to be worried was the big fall last time and the big impact on the dollar. And in addition, markets preliminary ISM non-manufacturing PMI, which came out worse than expected. On the other hand, recently we've seen US figures improve, including the ISM manufacturing PMI. Anyway, it can really go both ways. It'll overshadow factory orders at the same time. It's also, most importantly, perhaps, or not, well, as important, it's a hint for tomorrow's US non-farm payrolls. And just one last thing, Australian retail sales at night. Let's see if it continues the winning streak of events for the Australian dollar. And yeah, and the tension, of course, continues building not only towards the ECB, but also towards the non-farm payrolls report tomorrow. Okay, so thank you very much, everybody, for coming and hanging on despite the